Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. Let's quickly look at how the markets are trading at this point in time, and then we'll soon get your expert views as well. First up, the Sensex down by 150 odd points at 63,016 odd levels. That's the kind of move which is a 0.25% down in trade. 18,721 again for the Nifty. So it's been slightly volatile but hovering around this range from the morning session up until the first half of the trading session today, down about 0.2% in today's trade. Let's look at the broader markets, the mid and the small caps as well, to see which way are the markets headed here. It's a flattish with a positive bias for the mid cap 100 index. It's hovering about 18 points higher in trade. The Nifty small cap 100 index is doing better. 0.25% uptick for this one, 10,795 for this index. But let's also look at the Nifty Bank, for example. Yesterday, this was the index that actually pulled down the markets, really. And today, again, we're seeing some cuts coming in, about half odd percent of a decline for the Nifty Bank at 43,402. That's down about 230 odd points. So which are the constituents that are participating here? Well, it's the PSU banks that is dragging the index, definitely. It's trading near the low point of the day, 0.3% lower in trade. The private banks also seeing heavy cuts coming in, about half odd percent, mirroring the Nifty Bank fall. The financial services also similar cuts coming in, half odd percent of declines coming in at 19,337. The Nifty Financial Services is down by about 0.45% in trade today. But some of the sectors are in fact doing better in today's trade. Autos, for example, are in focus, 0.3% higher at the day's high point in today's trading action. So that's the index that you need to watch out for, stemming the fall for the markets. The FMCG sector is also doing slightly better. The IT stocks are doing better too, about half odd percent of move coming in. On the top side, you can see the Nifty IT index right there. The FMCG is absolutely flat at this point in time, although it has recovered from the day's low quite sharply, but still about 0.1% lower in trade. Let's also look at how the realty and the metals pack are really doing at this point in time. The consumer durables for sure are absolutely flat with a positive bias amid a lot of volatility that has been going around since the first opening tick. The realty index is in fact doing better today, half odd percent of gains coming in. Let's also look at the gainers and the losers as far as the metals pack is also shining bright. On top of the Nifty gainers, you can actually see a whole host of stocks from the auto basket, like Tata Motors again in flavor today, 2.3% uptick. HDFC Life, so the life insurance space remains buzzing. HCL Technologies in the IT pack is up by 2% odd, so that's the one that's showing some gains coming in. From the auto pack, Eicher Motors is also up in trade, Power Grid, Tech Mahindra. These are the other gainers. On the laggard side, you do have some of the other stocks which are in fact down in trade. Bajaj Twins are perhaps slipping in trade. Remember, yesterday these were the stocks that were buzzing, and you're seeing some profits being taken off the table in today's trade, and that's the one that's dragging the financial services space also lower in trade. M&M is not participating in the gains seen in the auto pack. Ultratech Cement is down by 1%. IndusInd Bank, ICICI Bank, the private banks that are definitely weighing on the sentiments as far as the banking space stocks are concerned. But let's welcome our guest on the show. Mr. Vineet Bulinshkar joins in from IFL Securities, Head of Retail Research. Thank you so much, sir, and thank you so much for taking the time out for this discussion. First up, your own take. The markets have been slightly muted since yesterday. We came very, very close to those all-time high levels, but the selling pressure came in. How are you looking at the trading setup now, and what do you expect going forward from here?
So, we've seen some advanced tax numbers come in, which have been encouraging. GST numbers are also quite buoyant. So, the corporate growth is quite on track, number one. Number two is the fact that, while we were hitting new highs, there's a lot of consternation around what the interest rate policy is going to be of the Fed. And because of that, we've seen some tired bulls giving up and market having corrected. It is my own perspective that once the rainfall formally sets in, properly across the country, we will have the market rebound. Until then, I expect some sideways to a slightly down kind of trend to prevail in the markets.
All right. Vineet, I also wanted to understand from you, some of the stocks that are buzzing the most in trade today. I wanted to take your views on those. For example, HDFC is in up by about 9 odd percent in trade today. How do you view the news that's coming in? We have seen the exit coming in from Aberdeen at a whole lot of profits coming in, but the stock has reacted positively after the stake sale. Your thoughts on HDFC?
So, with the Credila institutional deal taking place, now the decks are completely cleared for the merger, which will go through, obviously. And I believe that most of the selling that was expected because of the MSCI weightage and also the weightage that would be in the index coming off, I believe that much of the selling has been absorbed. And from here, we should see HDFC Bank and HDFC move up uh, into July 17th when the formal date of the merger will be adopted.
Hmm. Indigo is another stock that I wanted to understand from you. How are you looking at it? In fact, Indigo has placed the largest order in aviation history, 500 aircraft from Airbus, and this will take the total, the tally to almost 1,000 planes over the next decade for Indigo. This is the largest ever order that's been placed in the global aviation industry. What is your own thoughts on Indigo? How would you really trade the stock at this point in time? We're talking about Indigo, the Interglobe Aviation.
So, let's focus more on the larger story. And, if you just go back a few years, we had uh, a rapid consolidation happening with very few, incumbents, profitable incumbents being around. But since then, growth has picked up, and with Tata's and Indigo having placed orders for these large number of aircraft, what is going to happen is that India is going to become a very big player in the international market. So, earlier we did not have the capacity, so all the slots were given to international airlines, and now the business out of India is going to be done by Indian air carriers. And just if you go back a few days, the Emirates and the American Airlines were denied slots. So that tells you the stance that the Indian government is taking. Accordingly, as you know, we are already one of the most fastest growing and most profitable aviation industry globally. Ticket prices have spiraled, yet the occupancies don't come off. And I believe that this trend is here to stay, and it will only add to the sector. And with the Ayodhya temple coming up, if you see Ayodhya, Prayagraj, and Kashi, will witness. It is estimated that they could see 25 crore people come here annually. That is a mind-boggling number because just now only Kashi gets 10 crore. So with these kind of numbers, the inbound traffic of Indians as well as international flyers coming to India for religious tourism is really really going to substantially go up, and it is going to be very difficult for the players to keep pace with this kind of demand, and that is a good problem to have. So we expect the sector to do very well, and Interglobe Aviation is one of the largest carriers in the country, should do very well in the going into the decade.
But do you think 3,000 rupees is the next target that one should aim for on Indigo?
So rather than putting a target, 3,000 could be a smaller number when you look at it from a slightly larger perspective. It should be
Okay.
one of the stocks that becomes a core holding in your portfolio.
Okay, understood that. So over the next 5 to 10 years, or this is a stock to be kept in your core portfolio, and one can expect multi-bagger returns. Is that right?
That is correct.
Okay, understood that. So aviation space buzzing clearly, and Indigo could be a multi-bagger stock, a very, very strong story unfolding over the next, 5 to 10 odd years. In case that long visibility is what you have for your portfolios, definitely look at this stock in that respect too. Another stock that has actually created some concern for investors this morning is IFL Securities. In fact, last night we got this news that SEBI has barred the broker from taking fresh clients for 2 years. Even though IFL Securities insists that the order does not affect company's existing business with the existing clients, this is definitely a big blow. We've seen the stock slipping almost 19% on an intraday basis. Even now it is at 14% downtick at 61.2 odd levels. IFL Securities has also approached the SAT, is going to be approaching the SAT with regards to this SEBI order. But how do you read through the kind of order that has been given against IFL Securities, and what does it really mean for the existing investors?
So definitely the negativity of the diktat has been priced in. Number one. Number two, if you look at the corporate performance, it all depends on how many clients you add as you go out. And if you see their ADTO, which is the average daily traded turnover at the end of the quarter, was from a mean of 154 lakh crore, 1.54 lakh crore, had gone to almost 1.9 lakh crore. So they had seen a substantial jump. That is going to get impacted. But at the same time, the company has got a lot of levers to cut costs, because the costs associated with uh, you know new client additions will come down. So you will see the bottom line become very, very strong, right? Because the cost base will be in more control. They would be spending most of their energies on client retention and growing volumes from existing clients. Already the strategy of the company which they had on hand was to sell off their retail online broking business to 5paisa.com. Now they may or may not take it up immediately, considering the fact that this ruling has put their growth plans in jeopardy. uh, but I believe that it is quite a cheap stock, and the profitability will not be impacted too significantly, as I told you, for the reasons that uh, they'll be concentrating more on their existing clients, which are profitable clients, more on the high net worth individuals. Their costs, which are related to expanding the market, will be curtailed, and it would not be as bad as the market expects.
Okay, but at this point in time, should investors ignore this concern for the medium time and in fact look at how this could be an entry opportunity?
So, 2 years is a very long time if you are debarred from, getting clients. So, until that gets resolved and the SAT re-appeal that they go into, if it is, struck down on the ruling of what the exchanges have done, then that would be another story. But at this point in time, I think it's best to just stay away from the uncertainty that is around. I always say, I always tell our investors that, there are so many growth stories in the market. Focus your energies on the ones where the growth is there. If
Yeah,
anywhere the growth is in question, and 2 years is a very long time. So, just, let
sure.
this stock uh, you keep tracking this stock for academic purposes, but definitely not to put your money in that.
Right. But Vineet, I wanted to understand from you, how does this reflect on the larger picture of the broking community in India? We have multiple brokers now. We've been seeing disruptions also in the industry with, players like Zerodha coming in, but traditional brokers, and, we've seen several instances in the past as well. We've seen 3 weeks back only, the regulator cancelling the brokerage license of Karvi, and this was a long pending issue as well. We've seen the misappropriation of funds done for in history by some of the brokerage houses like that. Is that a bit of a concern for the larger picture? Should the regulator be stringent enough to bring in such norms that all of these could be checked for appropriation? And how does it really impact the client's business?
So, see, Karvi is a story from which everybody has learned their lessons. Not only the clients, the brokers, as well as the regulators. And after the Karvi issue, we've seen a string of regulatory disciplinary measures come in. So that regulator has been painstakingly coming out with regulations which makes the market a very safe place to transact, especially from the consumer point of view. And not only safe, but also cheaper as much as possible. That is what we have seen happening with the mutual fund industry. So it is a move from the regulator side towards improving efficiencies. And I think most of the good work has already been done, and there would be a little bit of incremental work, but it will mean not too much of a uh, significant improvement on what has been already been done. Uh, Coming to think of it from the corporate side, the brokerage community, I believe that IFL was a very large player. They had more than 1% market share, and they were, one of the leaders in new client additions of the new age, disrupting brokerages. They were a discount broker. So what happens is now that the other players like Zerodha, Motilal Oswal, Ventura, for example, and many other brokers will definitely benefit, who are discount brokers, because now the volumes will start moving to these clients.
Okay, understood that. Let's move on to see some of the other pockets right here. Any other things that you believe that in this current market is catching your eye, Vinay, in terms of themes or in terms of stocks where you believe investors should keep an eye now?
So I think pharma has been a laggard for a very long time. And I believe that the pharma rotation should that start taking place. Here we like Cipla, Natco Pharma, and Dr. Reddy's could spring a surprise for FY24. So my pick would be Dr. Reddy's as a momentum play for the next couple of quarters, and Cipla from a 2 to 3 year perspective.
Okay, understood that. Well, thank you so much, Vineet, for being with us on the show and discussing so many insights with all our viewers. Pleasure having you always on Business Today TV. Let's look at the markets again. About 138 points of a cut for the Sensex, 63,029 and thereabouts. So the markets are hovering near in a very narrow band. 18,722 currently for the Nifty. It's down by 34 odd points. We'll have to keep a keen eye to find out what really happens in the second half of trading session, especially the last, half an hour or 1 hour, and if there is any sentimental move on the upside, if there is any pocket that is able to take the leadership and revive the bullish sentiments in the markets again, because right now it looks like a bit of a profit taking and sulking kind of a space, because we're seeing most of the sectors actually also come under some kind of selling pressure as well. What will it take for the markets to again take up the next leg of the rally is something that we'll keep an eye out on, and we'll constantly get you expert views onto that. So for that, do stay tuned onto Business Today TV, and don't forget to subscribe to this channel as well. Many thanks for tuning to us.
Hello and welcome. You're watching Business Today Television. I'm Tanya Anija, and with me, someone who needs no introduction. He has over 18 years of experience in the stock market, and he's the co-founder of StockEdge. We have with us Mr. Vivek Bajaj.